What is going on, YouTube? The Dividend King here with another video. In today's video, we'll talk about what are the downsides of having or just a dividend portfolio. What's the downsides of having a majority of your stocks pay dividends? As you see here, my stocks here, 95% of my stocks pay me a dividend. I have a few shares of some EV companies, electric vehicle companies that don't pay dividends. That's my long-term hold, but really, like Nissan and Nino, but most of my stocks pay a dividends. So we all know the pros of getting the dividends. You get paid money, a dividend every quarter, every month, and this creates you the ultimate passive income because there's nothing you do just hold the stock. But what's the downside of just owning dividend paying stocks? Well, when I first started my journey, I didn't know much about like what to look for in a dividend. So the downside of just dividends itself, number one, the company can decide to cut the dividend in half or 60 to 70%. So if it was paying 20 cents, they can reduce it to 10 cents. To have a board meeting, and if the company's not doing well and they're taking a lot of hits, like give an example, the pandemic happened and like the hotel industry got hit hard. Some hotel, the Marriott companies, they was paying a dividend every month, but they stopped paying it because people were staying home. They had lockdown orders. Nobody went to hotels, so they cut their dividend. And some companies cut it in half, from 10 cents to 5 cents. Some suspended the dividend. So that's number two. They can suspend the dividend. If the company's not doing well, they're not going to pay out money. They need their money to stay afloat. So number one, they can cut their dividend in half or 60 or 80%. Wherever the boards choose, they can cut it. They can suspend the dividend, meaning they can cut it in full for 6 months to a year. It don't matter. I mean, whatever they decide on, it affects all shareholders. Those are the big two ones. And the third one, like I said, dividend is not guaranteed. They can skip. If they pay every month, if they decide to skip a month, they can do that. You're just a shareholder. You don't own the company. They can do that. So it's very, very volatile in the dividend investing world. So that's the downside of it. So you make sure that you invest in companies that are good companies. You know how they make money. You can see how they make money. You can see them making money for the next 20, 30 years. You can see the long-term growth of the graph. Like Main Street Capital is one of my favorite ones. Was the 5 years. When I see a graph like this, the past 5 years, and it's steadily growing up, and it dropped because of the pandemic, but now it's going back up. I like to see that. So that's a good graph for me. But if you see the opposite of this, it was started here and it started going down and it cut the dividend. That's not a good look. So you gotta know what you're investing in. Don't invest in a dividend paying stock because to pay the dividend. You gotta really look into the financials, look at the history, how long they've been in business, how they make money, the graph. If there are dips, what happened to the dips? If they cut their dividend like 3-4 years ago, find out why, who runs the company, go to the website, get all the information before you make a decision, before you buy anything. I'm not giving no stock advice. You need to do your homework and research before you buy any stock on the stock market, because I bought a few shares of stuff. I thought it was a good deal, but I bought some ETFs too that, with good holdings, and they decided to cut the dividend in half from 10 cents to like 3 or 4 cents. I'm like, I'm not paying $30 for a stock to get a 2 cent share, and like GE pays like a 1 cent share. Like, and I don't understand that. It's a good company, but GE pays a very low share. Of course, it's like $11, but something like this, I want to look for this to be look at the line. Look at the line. See this? I don't like that. I wouldn't I wouldn't invest in this. I wouldn't. Maybe because it's going up now. If I could find out why it's going down, it took hits. I found out what's going on with the company and what's going on. But this company pays. I had this company years ago. Granted, it's a long. It's over 100 years old. It's an old company, okay, but it's not doing well right now. I mean, GE make appliances. I mean, the pandemic shouldn't affect them that much. They make light bulbs and washers and dryers, and they make a lot of logical stuff that a pandemic is not going to interfere with that. People buy light bulbs. People still buy washers and dryers. There's a lot of electrical equipment, you know. So, rule number one: I'm not a financial advisor or give you any stock advice. You make sure you do your own research before you buy any stock on the stock market. You make sure that you do your research, you look up, and you keep in the back of your mind that they can cut their dividend. So here's my thing. If they pay the dividend through the pandemic and their price drop and they were still able to pay their full dividend on time, that's a good company to work with because they took a hit. They took a hit and they were able to come back and still pay a dividend, and that's great news because everyone took a hit in the financial world with the pandemic, and the companies that still pay a dividend, those are the ones that will, in my opinion, keep paying a dividend. But keep that in the back of your mind that you must have first diversify, second do your research, and third don't put all your eggs in one basket. I am diversified across a lot of different stocks, so if one takes a hit, if one to spend a dividend for a long period of time, I can always sell out of that company and invest into another company. I want to have diversified your portfolio. Do your own research before you buy anything, and keep back in mind that they can suspend, cut, reduce, stop paying a dividend whenever they choose to. It's out of your hands unless you're on the board. So keep that in mind. And when I buy dividends, I buy it sparingly. I don't buy them. I won't throw like $1,000 into it. I throw a couple $100 in there, and I wait. Then I get paid again, and I put a couple $100, $150, $200, and then I wait till to see. Now I have some history. I have some data now over a year of investing in one company. Now I feel more confident because they paid me on time. They paid me through the pandemic. They paid me through everything. It's a little bit easier now. So this is Dividend Stock King. Thanks for watching my YouTube channel. Please subscribe to the channel, like the video, share the video. I'll see you next time.